What's up everyone, it's Scotty with MoneyVest. So in today's video, we are going to be talking about Tesla stock, and Tesla here recovering a little bit, up over 2.7% pre-market on the back of some other catalysts such as Elon Musk rolling out FSD free trials for at least 1 month for all US vehicles that have the capabilities for full self-driving. We did also have a price cut from Mizuho, a huge downgrade, and a price cut from 270 down to 190s for Tesla. And of course, technicals are now starting to stabilize a little bit. So we've got lots to discuss in this video. As always, if you enjoyed, find it helpful, all I'm asking in return is that you drop a like and of course subscribe to the channel. If you're just joining us for the first time, and links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos, including all of our trade alerts and trade ideas, options alerts, newsletters. Everything's going to be part of the benefits with the link down below. And the 16% annual discount does expire at the end of this month, so a few more days left. So this right here was the downgrade. So Tesla price target cut by Mizuho, and Mizuho revised its price target on Tesla, reducing it from $270 to down to $195. This is brand new, latest news, came out about 15 minutes ago. Cathie Wood's ARK ups Tesla bet with $28 million stock buys amid rebound. Also loads up on this online course platform. So again, picking up a lot more shares here. 163,000 shares bought up here on Monday, and of course Tesla valued roughly around 28.2 million shares worth of shares bought by Cathie Wood as she continues to gobble up on more and more shares here as the stock price continues to sell off. Now, this right here is a huge catalyst that came out today. So Elon Musk rolls out free full self-driving trial to the US Tesla owners, but only for 1 month. Musk announced on his social media platform X in response to a user's demand, and the trial will be extended to all existing owners who have not yet experienced the FSD beta, as Musk said in a response to a post by Tesla Mojo. So this right here was essentially, the 1 month FSD beta trial should include any existing owners who have never experienced it. And Elon Musk tweeted back saying all US cars that are capable of FSD will enter for a 1 month trial this week. So it's a huge deal. I mean, we've been waiting for this moment for a very long time, and full self-driving is really where Tesla's premium valuation comes in, because it's essentially technology on wheels as opposed to a pure automaker play. And that's where a lot of the bull thesis comes in for Tesla. Lots of the premium valuation comes in for Tesla, as we have already discussed on the channel before. And that is to say that, for me right now, Tesla is still an automaker. It is still a company that manufactures and produces vehicles. Of course, there's going to be some pushback and some difference of opinion in the comments or from other Tesla investors, and that's totally fine. That's what makes the market. That's what essentially creates the market, right? Everybody has difference of opinion, or if somebody is buying, somebody else is selling, everyone thinks and looks at the data and analyzes the data in a different way, and that's what makes the market. And for me, Tesla has a ton of potential, and a lot of the things that are related to FSD, related to, self-driving and robotics and AI and technology and renewable energy and, everything apart from just manufacturing cars, for me is like the cherry on top. For me, that's just, if it works out, fantastic. I mean, that's great, but that's really not what I'm betting on when it comes to Elon Musk and Tesla. So if you are betting or investing conservatively and you kind of hit your bull case, that is fantastic, right? That's the best scenario that you always want to be in. You invest conservatively, and you sort of have those expectations for base case and hope for the best case, right? You invest with the bear case, expect the base case, and hope for the best case. That's the best way I can put it with my approach to investing in Tesla, with my approach to investing in pretty much any stock that I'm analyzing, because at the end of the day, I much rather be conservative and right than be aggressive and wrong. Something that I've mentioned over and over again. It's kind of become a little bit of our channel motto or quote. Now, Tesla offers US customers a month's trial of its driver assistance technology. We just went over that. So, it will offer US customers a month's free trial of its driver assist technology, full self-driving FSD. Now, the stock price is responding to that a little bit. So you'll notice that we are seeing over a 3% momentum on Tesla, back up to over $178. But it's kind of like one of those things. It's kind of a funny story that Tesla's been selling off so much, and of course bulls have been getting crushed, and we're seeing a lot of momentum to the downside, and every small ray of hope that we saw 3% green, we're like, let's go. I mean, this is the time for the reversal, right? Without actually noticing that Tesla is still down over 50% more, 57, almost 60% from its all-time high. So we got a long way to go for that recovery, folks. I mean, it's not that simple. It's not going to be that easy for this company. Now, one of the things I've mentioned before on the channel is that profitability is why institutional investors and just hedge funds and just investors in general are going to be skeptical with the Tesla, is because of margins, right? Margins coming down, price cuts, and for that matter, even profitability could potentially struggle, in 2024. So earnings expectations have been getting cut. Expectations for deliveries have been going down because Tesla's price cuts are resulting in lower margins, which could result in lower earnings, and as a result, lack of profitability and higher valuation. That's another thing that we have to look at, is because as soon as the earnings go down, and price to earnings is nothing but a component of both the price and the earnings. If the earnings go down, that's a denominator. The P multiple as a whole starts to go up, right? So they move in opposite directions, and all of a sudden you'll think of Tesla as an expensive or an overvalued stock. Earnings per share here are expected to be around $2.95. So you can see that analysts are now pricing in for a decline on a year-over-year basis. So down from $3.12 to $2.95. So we've seen about 3 years of consistent declines from Tesla, and starting 2025 is when the forecast kind of reshifts back to over $4 a share. And based on those numbers, we're looking at 178 divided by 4, a much more reasonable 44, 45 times earnings multiple for Tesla. So that's really where we are. I think this is by all means a much longer time frame investable stock. From a trading standpoint, there's really not a lot of tradable opportunities to the upside, especially not at the moment, considering how severe the downtrend is, how significant the momentum is to the downside. But I really wanted to go over where the majority of the volume sits since 2020 for Tesla. So what you'll notice is that there is a massive area of resistance at two places where I feel like there's a lot of supply and resistance sitting right now. The first one's going to be in the 240s, as we've already discussed. This right here is going to be that lower high if and when we actually get up to that level. And the second level is going to be in the 200s, as you can already see. And I highlighted that before. That's the two most volume and most traded prices for Tesla, $200 all the way up to 240s. So those right there, very, very important areas of resistance and supply that Tesla eventually needs to break out of. I mean, this is just one of those things where the momentum's so strong to the downside that there's a lot of supply and we're just not able to break out of these levels. Every time we kind of make an attempt to break out, we get smacked right back down. Every time we come up to make an attempt here, we get smacked right back down. So that's really what's happening, is that every time we come up to that supply or that resistance, sellers are strong enough to bring us back below that resistance and those levels. The moment we start to see an eventually breakout here over those levels, that's when the shift of trend happens. That's the overall trend, and the overall pattern shifts once and for all, and then we start actually seeing some higher highs and higher lows to the upside for Tesla. But until that happens, I think this right here, very important resistance, and another very important area of supply that Tesla needs to break out of if we are to see any type of a reversal in overall pattern and trends here. Support level is going to sit at 160s down to 151, so a very, very important support down here. And right now we're starting to break back about 177, 178. But like I said, $200 is really going to be that level to keep in mind for Tesla over the long term from a technical basis. Needs to break out above that level if we are to see any type of momentum back up. So hope you all enjoyed this video and found it helpful. Let me know your thoughts down in the comment section below. I will actually be doing a video on Tesla, going over where Tesla will be in the next 7 to 10 years, similar to what I did for Nvidia. A lot of people seem to have loved that video, so make sure that you check that out. But I'll be doing a video on Tesla with my bear case, base case, bull case targets, price targets, as well as my fair value, so an updated analysis on this company for the next 7 to 10 years. So hope you all enjoyed this video, found it helpful. Make sure you drop a like. Don't forget to subscribe to the channel. Links to our Discord and Patreon is going to be down below. And as always, happy investing. I'll see you all in the next video.